Hello, everybody. Welcome. My name is Rima Rasool. I am the Investor Relations Manager at Zen EB-5. And today, Population and I are here to talk to you about our current offering, Zen at Desert Sky. Um, oh, I'm so sorry. What's happening? What is happening? Sorry, give me a second. Okay, so this is our disclaimer. I guess, we just want to start with transparency. This presentation is strictly informational. The real details are always in the PPM, the private placement memorandum, and the offering documents. Tonight, our goal is to walk you through the opportunity, answer your questions clearly. We always encourage investors to consult their immigration attorney, their tax advisors, financial advisors. We work alongside your professionals. We do not replace them. Um, and for many of you who may be on H1B or any other, other visas, this isn't just a discussion about investment. It's life planning. And EB-5 is about stability and really long-term control over your and your family's future. And I guess that kind of leads into why right now is the time to act. So, right now, all EB-5 categories are current. What does that mean? Investors can file immediately, apply for their EAD, apply for their advanced parole at the same time. That means work authorization and travel permissions while your green card is processing. Specifically for H1B holders, this is really powerful, obviously. EB-5 gives you a little bit of a safety net. It doesn't replace your job. It protects you if something happens with your employment. You're no longer trapped by a single employer. Also, there's grandfather protection. What does that mean? All applications filed before September 30th of this year are protected even if the program changes later. And why are we looking at this date, the September 30th date? It's because that's when the current rendition of EB-5 is actually expiring. EB-5 has been a law in this country since 1990. We're in the 36th year of EB-5. But I would absolutely say, as someone who's been working in EB-5 for over a decade, that right now, since 2022, has absolutely been the safest time for EB-5 investors. In 2022, Biden signs a law into EB-5 called the RIA, the Reform and Integrity Act. And that all of that is expiring this September. And that's why we say that this is the time to act while you're in this safe, I like to say safe valley of EB-5. And especially knowing that whatever happens after September, you are protected. You are, whatever might happen, and many things might happen. The money might go up. I mean, there's just so many different things. We can all sit here and pretend to be psychics. We're not. Nothing might happen. However, it is legally right now. This current rendition of the program does expire in September of this year, so that's something to definitely think about if you haven't retained your attorney yet. Um, Also, right now, because everything is current, DHS is just kind of adjudicating I-526Es at a faster rate. And why, again, right now is such a great time as I'll go back, as all categories are current at this time, investor demand is exponentially growing month after month, especially for Indian passport holders. And because of that, waiting longer may mean risking being in a situation where there's a backlog, where you just don't want to be, where, it's just a longer process at that time. Um, and also at that time, you wouldn't be able to file simultaneously. So, right now just is a great time to kind of get, if you're not yet in the process, but you know that this is something that you want to do, right now is definitely the time to act, to start moving. Definitely at least to retain your immigration attorney. About us, about Zen EB-5. So Zen EB-5 focuses exclusively now on Arizona build to rent and multifamily projects tied to real economic growth. We partner with EB-5 Coast to Coast, one of the largest USCIS designated regional centers in the US. Basically, so EB-5 Coast to Coast manages regulatory compliance, USCIS reporting, and we, as Zen, the developers, we handle development, execution, as well as investor relations. That's me, investor relations. And many of our investors are, H1B professionals. We understand the realities of what's happening right now in immigration as well as in the job market. And we coordinate very closely with attorneys who specialize in H1B to EB-5 transitions. If you need an attorney referral, Baplesh and I, reach out after the call. We'd be happy to introduce you. But as I said before, I think it's worth repeating. Um, if you don't have an EB-5 attorney yet, that should be really your step one. As attorneys are getting more and more busy, their bandwidth is getting, less, and you definitely want to get in while they still have time to process, kind of go through your application in a timely manner. Um, a little bit about EB-5 Coast to Coast. So EB-5 Coast to Coast has sponsored over 80 projects, raised more than 2.2 billion with a B in EB-5 capital. They have a 100% USCIS project approval rate. And over 1,000 investors have filed petitions through their network. When investors evaluate immigration strength, the regional center track record is absolutely critical. I always say not all regional centers are created equally. And you're entering an established system with proven filings, proven approvals. EB-5 Coast to Coast is, you can look at it. They just are one of the elite regional centers for sure.
Yeah. So I want to add one thing over here. This data you're seeing over here that over 1,000 investors, that's at least 3 months old data. So I am yet to pull up the latest data from the regional centers. By this time, the numbers would have definitely gone up.
That's very true. The last 3 months have seen an explosion of EB-5 applications going through. So I'm sure that, that number is actually much larger at this point. The developer team track record. So across our leadership team, we have executed more than 65 projects nationwide, over 12,000 units built, $130 million of equity returned to investors. And this is execution history. These aren't projections. EB-5 investors should care about one thing above everything else, and that's completion by a developer. And our track record at Zen shows very clearly that we finish what we start. Baplesh, do you want to say anything about?
Certainly. So as Rima said, in real estate development, completion is the most important thing. Like there's no point of starting a project if you cannot complete it. So whatever number you say is 65 plus, that's where we have completed those many projects, delivered it, and we exited those projects. And that's the most critical step or thing or metric you need to consider, because when you're working with a regional center for your EB-5 journey, the regional center is not going to pay back your money. The developer is going to pay back your money, because ultimately the money is invested with the development project, and the project has to exit successfully, and that's how you get your money. So when you're talking to regional centers, this is the number one question you should have is, what is a developer track record? I means Rima and I talk to investors every day. Sometimes we talk like 8 or 10 investors in a day. Most of the times they ask like, what's a regional center track record? While regional center track record is also important to make sure that everything is compliant, things are being done on time, people still don't ask the right question. Okay, what is a developer's track record? Have they done these kind of projects? Like how many times they have done it? That should be the most important thing for you. Need to understand where your money is ultimately going to be invested, and is there a clear path to exit? Is there a merit in the project itself? Don't go by the reputation of the regional centers, because regional center is just a middleman. They do not invest the money and they do not return the money. They are just the middleman in this whole process. The real important thing is the developer. What's the developer's track record? Have the developers filed any bankruptcies, any defaults, any projects which could not be executed? What is their track record in building this kind of assets? How many times they have done it? How optimized the team is to do such kind of things? So those are the questions you need to ask and care very carefully about all these things before you make a decision whether you want to invest in certain type of projects.
Absolutely. And that leads into Phoenix, one of the fastest growing major cities in the United States. The growth is, first of all, so fifth largest population in the US, most popular metropolitan area in the southern US. And so this growth has kind of led to housing shortage. And that is why we build housing in Phoenix, and it's really a no-brainer. Um, I guess let us go to the next slide because this kind of will talk to us about why. So the growth is very much tied to, semiconductor manufacturing and advanced tech infrastructure, not speculation. This is actually happening. So basically, we know that all of these big tech companies, these new AI chip companies, these data centers, what do they need? They need electricity. What is Phoenix? A desert. Right? So there's a lot of very cheap solar power, and because of that, you'll see that Phoenix is becoming it. It's a booming place for tech companies. TSMC making history with $100 billion investment. Intel expanding 20 billion into the next gen semiconductor manufacturing. And if you look at this map, you'll see where TSMC is, and then the big star is where our development is. So we basically are in this area that's just the economy is booming. For many professionals working in tech, engineering, AI. This is the economic engine that's powering all of this. And if you invest with us, you're investing in a market that's very much aligned with long-term national strategy as well. Housing demand follows job creation, and that's really the foundation of this project, of where it comes from.
Yeah.
Um,
Also, let me add some more color to it.
yes.
Um, of course, I believe majority of people joining today are from tech background, including myself. I'm also engineer by trade, but I did it for more than 20 years and then chose real estate my next hop on. I don't know what will be in the future, but for now it is real estate. But this is very interesting because, if you ask me 10, 20 years ago, what will the Phoenix look like? Phoenix used to be a manufacturing and logistics cities because of the cheap land. The land in Phoenix used to be very cheap. The cost of living was one of the cheapest among all the metros in Phoenix in the country. But since Phoenix is more of a desert area and not just the Phoenix, the surrounding area like Casa Grande, and if you ever go to Phoenix, you will see that the city, if you start driving, the city doesn't end. Like you just keep on driving, and the city is just expanding because every year about 100 to 120,000 people move into the city in the Phoenix metro area. But what happens is the government realized that there is a lot of opportunity for us to invite a lot of tech companies because of the infrastructure we have built. Like if you go to Phoenix, amazing infrastructure in terms of roads, how well planned the cities are, and on top of that, they saw an opportunity to build this whole solar enabled tech. Okay, if you take the batteries, there is a core battery which built up their mega plant in Buckeye. and then there are other facilities. So the dynamics changed from the traditional manufacturing to go more towards a tech-enabled industries, because the electricity is literally like at no cost. And if you go to Phoenix or surrounding areas, you will see tons and tons of solar farms which are giving electricity to this thing at a really dirt cheap prices. Okay. Rima, can you go to next slide? I want to over
Sure.
there. Yeah. So here, again, you all know OpenAI, and you all know SoftBank. If you are in tech, SoftBank is one of the biggest VC which funds the tech startups. The SoftBank and OpenAI, in partnership with TSMC, announced $1 trillion investment into the Phoenix metro area. And the reason for that is the presence of TSMC, which is already there. The infrastructure has already been built. TSMC is already expanding. Right now, they have one fab. They are building five more fabs. Okay, the infrastructure is there. So the plan is to replicate a city of Shenzhen. Shenzhen is a manufacturing city in China. The plan is to replicate that city in Phoenix or near Phoenix, so that US does not have any dependency on China for its chip, robotics, and AI needs. Um, Again, these kind of plans don't happen overnight. It will be probably a decade long or maybe 15 years long plan. So things are already in motion, and that's an opportunity for a city to grow, and that's why it's making everything very friendly for people to move in. The infrastructure is so amazing, and it's also giving a lot of incentives for businesses to establish, to build more. And with all that thing, people need housing, and that's where we come in. We are trying to serve that demand. Like, if you ever go to there, you will see the amount of development happening in this area is amazing. There is a huge shortage. Like recently, Senator Gallagher of Arizona introduced a bill in uh, about the American Dream. I forgot the bill name, but the bill says that we need a dedicated category in EB-5 only for housing. Right now, there are three categories, right? Rural, HUA, and infrastructure. He is introducing a new category just for housing, so that it serves the purpose of EB-5. EB-5, the plan was to attract a foreign investment into the local economy, which helps to boost the local economies, or help fund the projects which are in the national interest. Housing is one of those things, because right now there is a lot of shortage of housing in the country, and that's where a lot of people want to invest to build more housing with the EB-5. And senators' efforts are really amazing. We are trying to partner with Gallagher to see how we can help him with his campaign, and make this as a national agenda, so that EB-5 is used for what is needed in the country.
Absolutely. And EB-5 success depends on job creation, right? So this density that we have here, it creates a very, very strong economic model. And we don't need to rely on speculation and projections. The job base already exists, right? And so, that's basically, I think this slide is pretty self-explanatory. Um, this is a rendering of the 62 townhome community, Desert Sky. Take a look. It's, 62 units. Um, Luxury in a way that it's everything that a family would want. We are I-956 approved in the HUA category, so we can offer the investment at the lower $800,000 investment range. We are looking for 10 investors for this project, raising $8 million. 100% required jobs will be created by January 2027. This is a 3-year investment term. We are looking to repay your capital by sale of the entire property in Q1 of 2029. We have a job creation guarantee. And we also have an I-526E denial refund guarantee, as long as the denial wasn't because of any fraudulence on the part of the investor. Um, Basically, this is I like to call it a boutique EB-5 offering. It's like one of our smallest developments. It is definitely our smallest EB-5 offering. And I'm sure that we people have questions. We're going to try to get to all of them. But if we aren't able to, we'd be very happy to get on a one-on-one call with you, in the coming days. This is more renderings of the project. As you can see, it's a beautiful community. The interiors they'll have a pool house, etc. And these are all, again, built to rent. So these are rental properties. This entire community will be a rental community. So an income producing rental community property for for anyone. And then we can talk a little bit about the project economics here. The total project cost, as you can see, is 25 million. Expected value at sale we're looking at a conservative 31.5 million. And that creates an 81% safety margin relative to the EB-5 loan. Investors look for margins of safety. I think we definitely can give you that. And this cushion is inbuilt right into our structure. Bhupesh, do you want to say anything about the capital stack?
Certainly. Sorry, I keep on putting on mute because I'm in Starbucks and there's a little bit of noise over here. So yes, the project cost is about $25 million. And if you see it over here, um, we have, as a developer, we have invested $2.5 million towards buying the land and the early development process, including entitlement, pre-construction. And we also secured a bank loan of $19.3 million. So between us and the bank, we are more than 90% already covered. And actually, $25 million is a little bit conservative because when we underwrite a project, we always write with some contingencies. The actual project cost will be anywhere from 23 to $24 million. Okay. So that being said, if none of the EB-5 would have happened, though we have investors now, let's say none of the EB-5 would have ever happened, or we decided not to do EB-5, the gap was only like probably $2 million, which is very easy for us to bring in the money and bridge the gap. Now, but here we saw an opportunity to reduce the cost of the capital, because the reason for us to do EB-5 is not to raise capital for the project, but to raise capital at a lower rate. Okay. And I tell that upfront that this is our intent. Bank loans are expensive. This loan which we're talking about here was approved at nearly 8%, 9%. Okay. EB-5 loan is at a much lower cost. So our intention is two things. One is to bridge that about $2.5 million gap, plus lower the bank loan so that we don't pay interest on all $19.3 million, which is going to be quite some money. And that's all our intent is. Okay. Secondly, when we exit in 2029 via sale of property, there's also a chance that we might do a refinance, but our primary exit will be sale of the property. But if, let's say, the market is really good and we saw an opportunity that if we wait for a year or so, or maybe 2 years, we might get a much better returns, much better profits, then we don't mind doing a refinance of the property where we will be able to pay back the bank loan and the EB-5 investors. And after that, we and the new mortgage will be the owner of the properties. Okay. So we have done a very conservative underwriting to see that what will it looks like in 2029. As you know, build to rent or any rental property is a business. Okay, it's not a means for from investment point of view, it is not a resident. It's a business for us. Okay, when you operate a business, buyers look at how much income this business is generating. Okay, based on that, they apply a cap rate to come up that what will be the potential value of this if this business when they put an offer. It's an industry-wide standard. There's nothing new over here. So, Rima, maybe go to next slide. No, next one. We'll come to this later. Yeah. So if you see it over here, um, based on our projection and third-party reports, which is available for you to review, we are expecting a net operating income of $1.65 million in 2029. Okay. That will be the base for the valuation of the property by applying a cap rate of 5.25%, which is very conservative. New construction will see a cap rate anywhere from 4.5 to 4.75, but we are just applying 5.25 to be little conservative, and with that gives us a valuation of about $31.5 million. After that, if we apply all the closing cost and the brokerage and everything, we are looking at a total net proceeds of about $7.8 million to us, including our original contribution. So this is a very healthy return for a property of this size and a duration of 3 years. Any developer will like to execute in such a number. However, this is still conservative. We might actually see little higher, probably 9.5 numbers. And that's very important for you to understand is because the better is the cushion in the profit margin, the better is for it to execute. Because let's say if the market, if we don't get it, we still have a pretty good margin and we have a number to play with, okay, and see at what point we want to exit. So this is something, again, you need to evaluate when you're evaluating a project is what is the profit cushion in exit. Now, obviously, it's not coming to you, but ultimately it is very important for you to look at it. What is the margin and what is the chances of it being exited, right? Because the better the margin, the better is the chances of being exit, and then you'll get your money back. Okay.
And should we go back to this slide?
Yeah. Okay. So this is one question which I often get, and people are right about it. They say, okay, I'm going to invest $800,000. And what is your skin in the game? What is the developer's skin in the game? Okay. Can you go one slide up? Okay. People look at this capital stack and say, oh, your skin in the game is only $2.5 million. That is actually not correct. If you look at it, the bank loan which we have secured, that is also our skin in the game. Even though the money is coming from bank, but we are guaranteeing that bank loan that we will repay that, and our personal assets are attached to it. All the bank loans are a recourse loans, right? Which means our assets are attached to that bank loan. Let's say something happens to the property or something happens to the project, and let's say it stops in the middle. Bank not only take over the project, it will also go after our assets to recoup the remaining of the losses it is going to incur. Okay. So that's why my skin in the game is not just $2.5 million. It is $2.5 million and the bank loan which the bank has approved, which is $19.3 million. So this is very important for you to understand that when a developer says that I'm going to contribute only 10%, 20% or something, that is not only their responsibility. Their responsibility is bank loan, their own, plus on top of that EB-5 also. It does not mean that we don't care about EB-5. Okay, you're trusting us with your money, and it is our responsibility to take good care of that money and return you on time. Okay, if you don't return in the time, okay, even though it's an unsecured loan, it is not banded with any collateral. I'm done with this business. I cannot show my face to any EB-5 investors in future. Done. We are out of the business because EB-5 is such a small community. Once I mess up, I'm done. we are over. Okay. So that's why the skin in the game is just a number which people need to contribute, need to look at not only the actual hard money the developer is putting, but also the guarantees it is signing for the bank, plus also the responsibility towards the EB-5. So ultimately, the entire project cost is my skin in the game, right? We are responsible for returning everyone, the bank, you guys, and obviously to us. Like even though I'm putting my hard money, I also have a responsibility to recoup my money, right? So it's including everything.
And basically, here is our guarantee to you. The developer, we provide a personal guarantee to ensure full project completion. Job creation guarantee. All EB-5 required jobs will be fully created within 15 to 18 months. And then the I-526C refund guarantee. If your petition is denied by the USCIS, you will receive a full refund of your investment. And just to get a little bit into the jobs, so you know that for EB-5, for every investor, what the basis of EB-5 is that 10 jobs are created per investor, right? And basically for this project, we have a 76% job cushion, meaning for the jobs that we've created for approval where the USCIS over 175 jobs, and then we are taking 10 investors, so that would be 100. And so we do have, always look at the job cushion of the projects that you're looking at. You absolutely, that's very important because at the end of the day, the basis of your EB-5 investment is job creation. And so that's super important. Fast track investment terms. Alrighty. And I like when Baplesh talks about the money and the finance. And the reason for that is because he is our internal fund administrator. And so I like to tell every potential investor he is the gentleman that is responsible for returning your money back to you. So he's definitely someone that you want to talk to. And I will let him go through these terms. I through this a little bit, but as I stated earlier, the minimum investment is 800,000. That's what we're allowed to offer. We are an HUA project. We have an $80,000 admin fee. We have a 1% per annum preferred return to our investors. This is not an equity investment. This is a debt structure. This is a loan. That's the fund structure. We have a 3-year term, as we were talking about before, Q1 2029 for loan repayment. Of course, there's a possibility of early repayment. As we mentioned before, the exit strategy is sale of the entire B to A asset class, build to rent, I'm sorry, B to R asset class. So sale of the property. And as Bhuplesh mentioned before, if the market is booming, maybe a refinance of the property. But that is the strategy on our PPM is a sale. And flexible funding. So basically, it depends on project to project, but we do accept partial investments. You can reserve your spot without waiting for your entire source of funds, for your entire liquidity for the 800,000. For this project, we have very limited space left. If you know that, this is something that you want to do, you have two ways to go about it. We do take installments, meaning that you can start your EB-5 investment with a minimum of $100,000 investment. At this point, your source of funds should be somewhat completed and your attorney gives you a thumbs up. This is just something for you guys, for people who maybe, want to keep a little bit liquid or whatever it might be. However, you only have about 4 months total to get your entire investment in. It's just a way to start your EB-5 clock so that you're kind of on your way to your AP, your EAD, and we do accept that at the $100,000 minimum. If you're looking to just reserve a spot, you say, you know what, I really like this project. I'm not ready yet with my attorney and source of funds. You can put down a $25,000 deposit. And that does go towards your investment, and also it's fully refundable in case your source of funds maybe doesn't go through, or you decide not to file. That 25,000 is refundable. However, it does hold your spot in our project, which is a smaller limited project. We don't have many spaces left. We do expect to be completely filled by the end of the month. And then this is more into what
So
I was
one more
talking.
thing I want to
Oh,
say is like
sure.
definitely set up one-on-one call with Rima and me if you want to talk about this project. Um, Both $80,000 and 1%, there is a little bit of negotiation room, depends on the situation to situation. So we can definitely work on that. But most important thing as of today is we only have 3 spots left. We filled the last 7th spot last week, and the gentleman funded completely today. So we have very limited spots. If you want to take advantage of this offering, then you need to reserve a spot and start working with your attorney if you have not already done.
Oh,
Um,
absolutely.
the
Absolutely.
investment part is something we can figure it out. It's not a big deal.
That's right. And, as as we've been talking about EB-5 demand increasing, exponentially over the past few months, projects like this, this is a very straightforward project. We are not a marketing company. We're a development company. And at the end of the day, the actual capital stack that we have, it's I think super easy for anyone to understand. It's a very, our PPM is about 70 pages. I really, after, I'll actually send everyone who attended our investor link that you can go through. Please look at the PPM. As I said, we are an approved project. And so, if you're looking to get into a project that kind of, we can never guarantee, because as a rule, as the law of EB-5, we have to say that, it's an investment. Your money is quote unquote at risk, but there are certain securities that you can take advantage of, and our project offers those. And this is, how the fund flow works. As I said earlier, we work with EB-5 coast to coast. The regional center is here for USCIS monitoring and reporting. And we have an internal fund administrator. You're sitting with him on the Zoom right now. That's Baplesh. And then externally, we use proxy. Basically, this is the gold standard of EB-5. You, as the investor, are coming in as the limited partner. Your money first flows into an escrow. And then basically the fund administrator is verifying your investor eligibility. And there are a lot of conditions that go with escrow release before any fund movement even happens. All of this flow is new with the RIA, the Reform and Integrity Act that I was telling you about earlier. And this is where I absolutely can say that, everything is monitored and verified by independent third parties, and then again the regional center is monitoring and reporting everything to the USCIS. The NCE is the fund that all of you EB-5 investors are fund pooling your money into. And the JCE is the actual project. So as work goes on, the JCE is taking money from the NCE, and the NCE is where the money goes back into before you get your money back. So if you want to talk more detail into this, I'd be so happy to get on a one-on-one. But Place would be happy as well. But this is really the gold standard of money movement in EB-5. This is what you want to see. And then a little bit into the development team. I'll let Baplesh talk about this.
Certainly. So Balakrishnan is the founder of the company. Bala is actually was, I won't say anymore. He was also a tech entrepreneur. He's immigrant with his country. He came to US to pursue masters, and then gradually he started working in tech, and then eventually started a tech company. That's where I met Bala. I was one of the early engineers at Bala. Both Bala and I are from tech background. As I said, I'm an engineer by trade. I also came to this country on H1B, so I understand this whole pain of going through this whole immigration process. I have faced many times challenging times at the airports. Probably some of them were not very pleasant. But once I got my green card, things have always been very smooth. Um, so Bala is the founder. When he started his tech company, in parallel, he also started his real estate venture. Initially, doing value add properties, buying old multifamilies, um, doing all the work which needs to make it more attractive, and then selling it off. But eventually, he started a ground up development, and that's what we do full time now. Okay. James is our CFO. He has been doing real estate financing his whole life. Shelby and Ray, they are the real estate gurus of the company, I would say, more than me and Bala. So they have been doing real estate their whole life. Shelby is a civil engineer by trade. Before joining P, she was president at the Empire Group, where she was responsible for many large scale BTR communities. Ray has been doing construction his whole life with his own venture, plus also working at many national builders. He has built more than 200,000 homes. So, a lot of experience. And obviously, this guy, again, I don't want to talk to him again, but you can see there's a lot of diverse experience the company has to make sure that we do everything. Like each of us has our own role in the company. Like I am responsible for raising capital. Shelby and Ray takes care of the real development, and James is financing all, and Bala obviously is looking after everything. So it's a great team, and we are expanding. Our EB-5 business is expanding. Rima is on board, and recently we bought another person on board, and we're continuously to grow. And so is our development team. We are looking to expand, and we are also have plans to go beyond Arizona. Not immediately, maybe in next 3 to 5 years, because real estate is a very local business. You cannot operate from sitting somewhere else and build in another state. That's not how the real estate development works. So you need to be physically present in that state. So we are looking to go into Texas because that's not far away, and we have done some projects in Texas. But for now, at least for next few years, our focus will be all in Arizona.
And basically, as you can see, this is like a very structured leadership team. And potential investors and investors in Zen are backing experienced, professionals with national track records. And I think that's what's so important when you're looking at the development team of the company. And that's where our guarantees come from. This project will be completed. In the beginning of the slides, you saw, basically at the end of the day, as Baplesh was saying, when you're looking at EB-5 projects, the regional center, of course, has their own standing, and obviously, as I said myself, all regional centers are not created equal. EB-5 Coast to Coast is definitely one of the elite regional centers of the country. But you also, for the actual project, need to look at the development team, and I think that any potential investor can look at this team and say that this is not a one-person operation. These guys didn't wake up yesterday and say, "Oh, let's build this community." And with that is the end of our presentation. I'm going to see if we can get to any questions. Give me 1 second. Hi, will you be sharing your details and this deck after the presentation? Yeah, absolutely, I could. How can we set up one-on-one sessions? I guess the best way, really, if you registered for the event and I have your email, I usually do send a follow-up the next day to everybody. But if you registered and you maybe, on another email, or maybe sometimes I notice people don't put their real email on. I am Rima, Reema, at zeneb5.com. And I'd be, really happy to talk to you, set up a one-on-one. People are running towards rural. Choosing HUA might cause huge delays in EB-5. Is it true? Very good question and very timely question. So, actually, I would say like a year ago, I would say yes, totally made sense to run to rural. I will also say the same for about 8 months ago. Maybe not 6 months ago, but the trends that we're seeing now because of this big rural boom, I can actually send you an article that we recently sent to our lists. We're really looking at a boom and like insane amounts of people running into rural projects. And as a result of that, we have many experts kind of foreseeing that we're going to have a backlog in our rural category. So that's number one. Number two, there's a reason that, that HUA is a separate category, rural is a separate category. A lot of people are looking at, oh my gosh, maybe I'll save 8 weeks on my final, getting my green card, or 10 weeks while getting my green card. When you look at the big picture, I don't know if 8 and 10 weeks is worth getting into a riskier investment. And you can look at any data, you can ask anybody. It is just a fact that HUAs, metropolitan HUAs, are just safer investments than rural. I have a lot of people oh, I'm looking at this rural investment. It's a hotel and spa in, Bumble X, Idaho. And it's like, but okay, but how are you gonna exit your money out of that, right? And I think we've made the case today to tell you, at the end of the day, Phoenix is in a housing shortage and we're building housing. And so,
Yeah.
two and two does equal four. And then
Actually, I want to also add a little bit onto that. The hotel is very interesting because we actually did one hotel project. And it was very interesting, very exciting experience. It is not something which is, I think I will do it again because the exit is super tough. Okay. Unless you are building in a super crazy uh, touristic destination where, for example, if you're building right across Disneyland, you know that you will have a year-round crowd coming to Disneyland and they will need a place to live close by, then yes, there could be. But if you're building in some remote areas with a seasonal crowd, for example, the ski resorts, they are seasonal. They operate only like 4 to 6 months in a year max. Or you're building a hotel in some other rural area or a resort. They don't get tourists all the time. So how will you um, confidently say that we will be able to exit? And most of the time, the exit criteria for hotel or resort says the operational income. Like again, you need to ask like, are you sure? Like what is operational income? How can you make certain that there will be enough operational income? Because on paper you can show anything. Okay. Many times these big hoteliers, they have a big number as a grand gross earnings. Then they have their own expenses. Okay. Sometimes they bump up the number. Again, let's not go into that. Let's say that there is some number. Now, every hotel industry need to keep some reserves, right? Not just hotel industry, any industry need to keep a reserve. After that, is there enough money on the table to pay back EB-5? I highly doubt. Okay. So I again, you need to talk to the person if you are interested in a hotel or resort to see what is your exit. Show me the real proof that you are able to exit out of this successfully.
absolutely. And then I have a question. I don't know if you're being sarcastic, Yash. Is the exit strategy to sell 10 townhomes for 31.5 million? I don't
I
know if
will
you're
be
being
su
sarcastic,
I
but
will be
no.
super, super happy if I'm able to sell each townhome for $3 million.
That sounds like, Manhattan pricing, but no. So as I mentioned earlier, this is a build to rent asset class property. The exit strategy is to sell the entire 62 townhome community with the townhouse, with the pool, with, this everything together. And, the build to rent is one of the strongest asset classes. There are investors who would just eat this up. It's RIAs. This is an income producing property. So for portfolio buyers, for VCs, this is just something, private investors, this is just something that will be very, very interesting and very advantageous for anyone to have in their portfolio. And if there are any other questions, I'd be so happy to answer them. Again, I'll just say that we absolutely are available for one-on-ones. I, would love to talk to you more about the project. If you're looking for in detail financing, Baplesh is the one that you want to talk to. Baplesh is also the one you want to talk to if you've already done your source of funds with your attorney and you're looking to, really get into the nitty-gritty of returns and admin fees. That's also Baplesh. I'd be happy to set you up with him on Zooms. And thank you all for being here. I don't see any other questions, and we've kind of gone through all of our information. But we absolutely wish you the best on your, EB-5 journey. And, at the end of the day, we always will obviously want what's best for you. So have a really good evening. We do this almost, every week. We a lot of times have immigration attorneys on to answer questions. So please do, join us if you want to get on our website and join our mailing list. And then, you would kind of be privy to all of the information that comes out. We do send some really interesting emails with, updates, etc. And if you're really looking to EB-5, you should be trying to get as much information as you can. So thank you again, and from Baplesh as well.
Yeah, thanks everyone for joining tonight.
And have a wonderful evening.
All right,
Hope to
take care.
talk to you soon. Take care.